What's up guys, how you doing? And I'm glad to see you again on my channel. In this video, I'm gonna be talking about currency pairs and their interactions with each other. I will also analyze currency correlations, and meanwhile, I'll be opening some binary options trades, so make sure to watch this video to the end. And in the description below this video, you'll find the link to my Telegram where I share daily trading signals, and I also run weekly marathons to increase your balance from $150 and up to $5,000 in a week time. Make sure to check these links below. And to sign up for PocketOption and to get 50% bonus on your deposit, make sure to text me today as well to get the registration link. And without further ado, let us get straight to our today's trading session. So here we see the price chart of the British pound and the Australian dollar currency pair. And noticing a signal from one of my indicators, I'm gonna open an up trade for $350 for 1 minute. And because the line of the Williams R% indicator was in the oversold zone between the levels 80 and 100, it began to move up, and this made me a signal, or gave me a signal about a possible price increase. And while my trade is on, I propose now to discuss straight away what kind of interaction occurs between currency pairs. So monitoring our chart, I think everything is okay now. So you've probably noticed more than once that when one currency pair goes up, the second tends to go down, or the relationship between them is completely direct. For example, the price of one currency pair falls, the price of the other falls with it. This is the correlation of currency pair looks like. A relationship that is often used in trading. And before continuing, our trade is closing. All right, almost there. And our tickets of profit added to my account $318. And back to the topic of our conversation, correlation only shows how exactly two assets move in relation to each other. In the case of currency correlation, the situation is exactly the same. Currency pairs can move together in different direction or not interact at all. And back to our topic, correlation only shows how exactly two assets move in relation to each other. In the case of currency correlation, the situation is exactly the same. Currency pairs can move together or in different direction or not interact at all. And do not forget that we do not trade just a currency, but a currency pair, where each currency of the pair influence the other. Therefore, correlation can become a useful tool and almost the only one if you want to successfully trade several currency pairs at the same time. So that's how useful understanding the correlation of currency pair is. Alright? I also would like to say that currency correlation is based on the so-called correlation coefficient, which is in a simple range between -1 and +1. An ideal positive correlation coefficient +1 means that two currency pairs move in the same direction 100% of the time. But the ideal negative correlation coefficient -1 implies exactly the opposite. Pairs are constantly moving in different direction, and if the correlation is 0, therefore there is no correlation at all. It is 0 and the pairs are not related in any way, and they do not interact, they don't have a correlation, as simply as it sounds. Okay, looking for a nice entry point. Now we're monitoring our chart. I made the down trade for $350 for 1 minute, and I noticed that despite the price growth, the Williams line occupied a horizontal position. And this is a signal for me for the beginning of a price reversal. In our case, for a possible decline in price. And while monitoring our trade, I'm gonna continue with our topic. And you may ask how to analyze and look for currency correlation. Unfortunately, this information cannot be found on the price chart. I suggest using the currency tool located on the Oanda website. It will exactly show you how currency pairs shift in relation to each other. All comparisons are made in relation to the original and most popular, the euro and the US dollar currency pair. Once again, I suggest paying attention to our chart because our trade is closing. And our tokens of profit added to my account $318.50 again. That's amazing, we keep going. So if you're working with several currency pair at the same time, you should immediately realize how much such trading is risky. Sometimes people choose several pairs at once to minimize the risks, but forget about the positive correlation when, for example, pairs go in the same direction. If we open trades on both pairs, we immediately double our position and the risks as well. So you should also pay attention to that. It's like a double-edged weapon. And you may ask why my risks are increasing, because if you turn out to be wrong with your prediction, you will lose 2 trades at the same time, because these pairs are mirrored. And now getting back to trading, and there is a clear downtrend here on the chart. So I'm going to open a down trade for $350 for 1 minute. And there is no trend for a reversal on the chart yet. So let's continue to consider, for example, when 2 different pairs go in the same direction. So we opened an up trade and the price went down, and we had a double loss because of the correlation. It also makes no sense to open one up trade and another down trade, because even with an accurate prediction, one of them will bring you a loss, because on binary options, one successful trade does not cover an unsuccessful one, and the payouts are less than 100%. So you should keep that in mind, guys. Because when you lose 100% and the payout is less than 100%. And in addition, the volatility of different pairs also differs. One pair can jump by 200 points and the second only by 180. And this should also be taken into account when entering simultaneous trades on different pairs. And our tickers of profit added to my account $318.50. We continue and let's analyze or compare the opposite side. For example, we have a currency pair. On the contrary, they have a strong inverse correlation, and the coefficient reaches an absolute value of -1. Such currency pairs behave like 2 magnets with opposite poles, constantly repelling each other. And if you open opposite trades on 2 pairs with a negative correlation, it will be the same as 2 identical trades on pairs with a positive correlation, again doubling your risks. Now I'm looking for just an entry point. But you know, the most reasonable thing to do, of course, is to work with only one currency pair and not touch the opposite pair in your trading at the same time, because you can lose everything very quickly. So what can you do with correlation, and how can you use it in your trading? Can it be used somehow? First of all, they will help you reduce your risks. And if you like to open simultaneous trades on different pairs, when you know about their correlation, this will help you avoid getting caught in the situation I just mentioned earlier. So it is when you double the risks if 2 pairs go in the same direction. So that's how you can use it. Or you can trade in different directions, not realizing that pairs have an inverse correlation, and this doubles your risks as well. Further, with their help, you can double your income, but also double your losses if you decide to trade with simultaneous trades on different pairs. A successful trade with pairs that have a direct correlation will double your income or losses. And of course, if something went wrong and the prediction turned out to be incorrect, you will definitely get a loss. So as I mentioned before, it's a double-edged weapon. And it should be said that a very small number of young traders use the principle of pair correlation in their trading. Most likely this is due to poor awareness and unwillingness to understand this very point. And on the other hand, a professional trader who knows about the diversification of his trades will always use the currency correlation table before opening any trade. That, of course, concerns the currency correlation topic. All right, and I made an up trade for $350 for 1 minute, and the price bounced off the lower limit of the Donchian channel indicator, and at the same time the Williams line began to move upward, thereby giving me a signal of a possible increase in price. And we continue with our topic, and I would like to emphasize that there are many ways to apply correlation in your trading or on the market in general, and you should be able to create your own trading system that best matches the current market situation when you start trading. All right. Also, I would like to note that there is a strategy based on the delay in changing the price of one correlation asset, and we need first to find a currency pair that has a strong correlation and then wait until it weakens, and after that we open a down trade on a strong currency and an up trade on a weak one, and then we wait for the moment when the correlation will recover. So our trade is closing right now, and our tickers of profit added to my account $318.50. And we continue, and the currency pair correlation strategy is another arbitrage strategy for correlation trading, which is based on two currency pairs with a common monetary unit. And at the same time, we make sure that one asset has it in the numerator and the other has it in the denominator. And for example, let's assume that such a currency pair is such a currency is the US dollar, and the correlation is negative because one asset has the dollar as the quoted currency and the other has the base currency. And at the same time, on the hourly chart, it will be possible to see how accurately the quote of one pair repeats the movements of another currency in the mirror direction. So that's for you to get the bigger picture of the currency correlation. And the problem is that on the hourly time frame, the movements are too similar and the currencies react almost immediately. But on smaller time intervals, delays of 1 to 2 candles are possible. And it's important to closely monitor two assets at once. And if we see that the dependent currency has reacted, it is better to refrain from opening a trade. And you also need to monitor the movements of the first asset negative to the second and vice versa. And the dependent pair may change. So guys, keep that in mind because this is a very sensitive strategy. And I opened an up trade for $350 for 1 minute and we followed the trend. But in addition, the Williams indicator line was also actively growing and even entered the overbought zone located between the levels 0 and 20. And this behavior of this indicator gave me a signal about a possible price increase. And let's continue with our conversation. Now, do not forget that the foreign exchange market does not want to please us with stability. It's not stable, it never was, and it will never be. So that's also a common sense, better say. After all, it's in a constant state of excitement, movement, and volatility, and the trader is working with it. As a result, even the strongest correlation, which can sometimes last for months and years, sometimes it changes in the most unexpected moment. And what is a correlation this month may become a completely different story in the next month. And our trade is closing right now. And our total profit added to my account $318.50. And this is the end of our today's trading session. And let's analyze the results together. So in today's trading session, I opened 5 successful trades and I made almost $1,600, which is a good result. Write me what you think in the comments below. And we also studied the correlation of currency pairs, and we learned that correlation is a very effective tool in financial markets when you use it effectively, of course. And do not forget that you only need to trade according to the strategy that you have already tested many times on a demo account. And do not forget about fundamental analysis, and that correlation is always caused by some event or a certain economic reason. And the correlation analysis allows you to predict the behavior of assets even before a situation in the market happens. So guys, I hope this information was useful for you and to help you make money on binary options. And of course, I would like to remind you, as always, before opening any trade, I need you to study the market situation very carefully and also use indicators that you understand their signals, because following these steps, it will help you reduce your risks and also help you make money over the long run. And as always, continue studying technical analysis and fundamental analysis as it concerns our today's topic. And also, as you've seen today in the previous videos and in the future videos, you also find out and learn that technical analysis and binary options is not complicated at all. And if you would have any questions, you can ask me on Telegram. The link to my Telegram is in the description below this video, and also the link to my Telegram channel where I share daily trading signals, and I also run weekly marathons to increase your balance from $150 and up to $5,000 in a week time. Make sure to check these links below and to sign up for PocketOption and to get 50% bonus on your deposit. Make sure to text me today on Telegram to get the registration link. And if you like this video, please give it a like, leave your comments down below, subscribe to my channel, turn on the notification bell so you get notified when I drop a new video. That's been it for today, and I'll catch you guys in the next one.